All right. Today we are diving into a technical analysis for Celestica, that's ticker CLS. And this one, wow, it is sending some seriously mixed signals. We've got this massive potential for a gain on one hand, but on the other, it's flashing some pretty big warning signs. It all kicks off with one pretty incredible number.
And there you have it. You're seeing that right. According to the analysis we're looking at, that's the projected gain for Celestica's stock in just the next 3 months. I mean, a number like that, it's going to grab your attention, right? That is a huge, huge forecast. And that really is the million-dollar question we're digging into today. Because, when you look past that amazing headline number, the story gets a whole lot more complicated. This explainer is all about navigating the difference between a really promising forecast and the complex reality hiding underneath. So, the report officially calls Celestica a buy candidate, but what does that really mean in practice? Let's unpack the data, let's look at how the analysts got to that conclusion, because as you're about to see, it is a fascinating balancing act. So, there's the official call, buy candidate. Sounds simple enough, but the story behind that label is just packed with contradictions. The report is pointing to huge opportunities and, at the same time, some pretty serious risks. So, let's start with the good stuff, right? The bull case. Why is the report so optimistic? We're going to look at the green flags, all the positive technical indicators that are propping up that massive 47% growth forecast. What's really compelling here is that all the major trend indicators are basically singing the same song. You've got both the short-term and the long-term moving averages flashing by. Think of it like this. The short-term average is a speedboat, and the long-term is a big cruise ship. Well, right now, the speedboat is pulling way ahead of the cruise ship, and that is a classic, textbook sign of strong upward momentum. The underlying direction just looks solid. And this brings us right back to that jaw-dropping number from the beginning. The report itself says, and I'm quoting here, the stock is expected to rise 47.16% during the next 3 months. This just shows you how much confidence the analysts are putting into that powerful underlying trend. It's really the heart of the whole optimistic argument. Okay, but hold on. It's not a straight shot to the moon. The analysis also shines a big spotlight on several red flags that are demanding our caution. And this, my friends, is where the plot really thickens. And this slide right here, this lays out the whole puzzle perfectly. Over on the left, you've got these powerful buy signals, all driven by that strong overall trend. But then on the right, you've got 3 separate sell signals, things like a pivot top and this thing called volume divergence, and they're all screaming about potential trouble in the short term. So what do you do with that? Let's break down one of those key warnings because it's really important. Volume divergence. So what on earth is that? Well, the report noticed that while Celestica's stock price was climbing, the actual number of shares being traded was going down. That can be a huge red flag because it suggests that the conviction behind that price move is getting weaker. Think of it as an early warning that the trend might be running out of gas. Putting this on a timeline really shows you what a roller coaster it's been. Look at this. On November 5th, you get a technical sell signal, but then, just a few weeks later, on the 24th, its status gets upgraded to buy candidate. And then, just 2 days after that, the price jumps up, but on that worrying low volume we just talked about. You can really see how messy and contradictory the short-term picture is. So with all of this back and forth, you're probably wondering, okay, so just how risky is this thing right now? Well, the report is very, very clear on this. It basically warns investors to buckle up for some turbulence. To get a feel for that risk, just look at this one day, a single trading day. On November 26th, the stock went from a low of $315 all the way up to over $336. I mean, that is a massive, massive range for just one day of trading. The difference between the high and the low that day was more than $21. That's a swing of nearly 7% of its value. That, my friends, is the very definition of volatility. And because of that kind of wild price movement, the report doesn't pull any punches. It gives the stock an official classification of high risk. This is such a critical piece of the puzzle. You've got a buy candidate that also comes with a big flashing high-risk warning label. So how do you even try to manage that kind of risk? Well, the analysis points to these key price levels. You can think of support levels as a potential floor, a price where the stock might stop falling and find some buyers. Resistance, on the other hand, is like a ceiling, a price point where the stock might really struggle to break through and go higher. These are the battleground numbers that traders are watching very, very closely.
Okay, so let's tie all of this together. This is the big question we've been building up to. How does this report possibly justify calling this a buy candidate when there are so many red flags and a high-risk label slapped on it? Well, it all comes down to weighing that long-term potential against all of this short-term noise.
This table breaks down their logic really well. First, they see the overall trend as strong and positive. That's the main engine here. The fundamental direction is up. But they totally acknowledge the short-term signals are mixed, even negative, and that the volatility is high. So what's the implication? You should expect a bumpy ride, but the belief is that the main current is still flowing upwards.
And this quote from the report itself really ties a bow on it. They're basically saying that even with all the short-term warnings, the sheer strength of the overall good trend is powerful enough that it might be creating a buying opportunity right now. It's a calculated bet that in the end, the long-term trend is going to win out over the short-term jitters.
Okay, and we have to say this, and it's super important. This is an explainer. We are breaking down a financial report to help you understand it. This is absolutely not investment advice. Making these kinds of financial decisions is serious business, and you should always do your own deep dive research and talk to a qualified professional. So, we end with a question for you. This whole analysis presents a classic dilemma for any investor, a potentially huge reward that's balanced against very clear, very high risks. After seeing all the evidence broken down like this, how would you weigh it? It's a really fascinating case study in how to navigate uncertainty in the market. Thanks so much for tuning in.